beautiful people. Welcome to the channel that teaches you all about money. My name is Onyeka Okonkwo, and on this channel I teach you the foundations of personal finance or financial management, investing, and how to build sustainable wealth, because we don't want to be rich today and broke tomorrow. Today we're going to talk about the one thing I talk about every single time, obviously money. But you remember how I also mentioned about financial planning every single time? Well, today I'm going to tell you what a financial plan is and how to create one for yourself. Why? Because it's the foundation of your personal finance journey. If you don't have that, you're gonna be like a chicken running around in... I was trying to be deep there, but I'm not sure what I was trying to say. You're just going to be confused, basically doing everything everywhere. If you're new to this channel, welcome. If you're a previous subscriber, welcome back. Everyone, please like this video, subscribe so you don't miss future videos. Let's hit it. So what is financial plan? I'm going to find some answers on Google. Yeah. Networth says a financial plan is a comprehensive picture of your current finances, your financial goals, and any strategies you've set to achieve those goals. Amazing. And Investopedia, another of my favorite websites, says a financial plan is a document containing a person's current money situation and long-term monetary goals, as well as strategies to achieve those goals. Fantastic. What's the purpose of a financial plan? It's designed to help you make the best use of your money and achieve long-term financial goals, whether they are sending your children to college, sending yourself to university, buying a bigger home, leaving a legacy because Steve Jobs, or enjoying a comfortable retirement. I know we don't like to think about retirement because we're so young, but hello guys, we're kind of getting old already. Okay, so let's jump down to the heat of things. How do you create a financial plan? Well, the most important thing to know is that you can create one yourself, because nobody knows you better than you know yourself. So what's the first thing you need to do? We're going to enter a bit of accounting here. So if you're scared of accounting, welcome to my world. So step number one, let us calculate our net worth. To get our net worth, we need to do two things. First of all is to build assets and the liabilities. What are your assets? Your assets goes from anything from your cash in your bank to the cash in your wallet to the houses you own. I mean, you actually own, not rented, to your investment balances. All of this are your assets. They are things that generate. They belong to you, ownership is yours, and they have the possibility of generating additional income for you should it be sold or converted in liquid cash for those not in cash. It also includes the money owed to you by other people. So here I'm going to call them receivables because you're going to receive them. The next thing we're going to do is to look at the liabilities portion of things. Your liabilities are obligations that we owe to other people. And here I mean if you are in debt, then that's a liability. It's, in other words, it's a payable. See, accounting is actually easier than you thought, right? Well, okay, so our net worth is going to be the assets minus the liabilities. When you know you're right to this is that you want the balance to be positive. When it's positive, it means you have more assets than liabilities. It also means that you have enough to pay your obligations. When it's a negative, it means that your liabilities are more than your assets. That means you are in debt and your asset is not sufficient to cover the things you owe to other people. Our target here is to stay on the positive side of things. So if you're on the negative, then you have some job to do. Step number two, we want to determine our cash flow. It's as simple as it sounds, really. It's cash, and it's the flow of cash. Really easy. To determine our cash flow, we're going to look at two things, and this is where we're going to build our income statement. One, we want to look at the actual income. What are your income sources and how much do you get from those income sources? So we're looking at our salaries. If you're a full-time employee, it's even easier because you know what you get every month. You have side hustles, you have other businesses that generate income either at a variable return rate, meaning that this amount you get is not fixed. It varies on a monthly basis, or just whatever thing you do that generates income for you, you want to track those and take note of them. The next thing we want to look at is our expenses. Now this is where it gets a little dicey because so many people are not great at tracking their expenses. I know, because I was once in that shoe until I got this amazing budgeting app that I'm going to link down in the description for you, that you can also download and supercharge your budgeting or your accountability journey. It's amazing. It's great. So you want to track your expenses. What do you spend money on? First thing to do is to have a general idea of how much you spend. Then the next thing you want to do is to break down what you spend that money on. So go back as far as 3 months bank statements, because you spend money from your bank account, and try to track this. And if you don't already have this, you can probably start doing it now. I mean, it's almost, well, it's April, I guess. So you can start tracking now in April and thinking about whatever you spend, try to keep track of it, keep record of it, so you know what expenses take the most part of your income. Why is this important to track? Because we want to be sure that we're spending on the right things. And even if we're not spending on the right things, we need to know where to cut money from. I'm going to tell you why later in step 3. So what do you do with this income and expenses? We're going to subtract the expenses from the income. If you're in a gain, then you have a gain, and if you're in a negative, then you have a loss. Where do we really want to be? On the gain side. It means that we are not spending more than we are earning. If you are in the negative side, then you are spending a lot more than you're earning, and that is bad for you. See 2 negatives already in the income statement and the balance sheet. Welcome to the world of accounting. So that's really accounting, actually, guys. It's really not more difficult than that. Step 3, we need to consider our priorities. And this is what we talk about, the financial goals. What are your plans? Nobody can define this better than you can define it. So your plans can range anywhere from wanting to go back to school, to taking an online course, to buying a house, to investing, to getting married and sending children to school. Whatever it is you want to spend money on, those are your goals. But what are the priority goals? Again, you know better, or you can get the advice of a financial planner, and they will look at your life plan and help you figure out what you should focus more attention on. Why do we need to prioritize our goals and even have our goals listed? Because it tells us what our future plans for money is. I think of money this way: an employee given a task to do or multiple jobs to do. We have to tell the employee when we want those jobs delivered, how soon we want them, how much resources they can spend in accomplishing that job. Your money is an employee. If you don't give it a specific task to do and when to do it and how much to spend doing it, it's going to do pretty much everything. There's going to be scope creep for my project management people, and it's going to find new tasks for them for itself that we didn't actually budget for in the first place. So priorities is always important. So these are the 3 steps you need to take for your financial plan. Again, I'll go through them again. Calculate your net worth, determine your cash flow, and consider your priorities. Now, when we have all these 3 listed, there are specific things we need to take note of while creating a winning financial plan. One of them is having an idea of our retirement strategy. I talked about retirement before. I'm sure some of you went, oh, I'm so young. No, you're not young. You're actually kind of older than you were a year ago. So retirement, maybe you have about, if you're in your 30s, you have about 30 more years. It's not as long a time as you think, considering you only have more responsibilities added to your life, because life happens to all of us. So what's your retirement strategy, and how soon do you want to retire? In your 60s or in your 50s? Have that down. And what kind of life do you want to live at retirement? Do you want to be the grandfather who needs his children to send money to him on a monthly basis, or do you want to be the grandfather who is born in the Bahamas enjoying himself because he planned for his life? That's retirement strategy. Number 2, we want to have an idea of our risk management plan. There's so much focus on earning money, but not enough on preserving money. So maybe you want to start a business. You have plans to insure your business. Yeah, so those are risk management strategies. Next thing we want to look about is our long-term investment plan. If you're going to invest for the next 30 years, we need to know what we're planning to invest in. To start this, we need to know, first of all, our risk profile. Are you risk averse or risk tolerant? Are you the kind who goes to bed, have their money reduced from 100,000 to 90,000, and you feel like you can't really breathe anymore? Then maybe you're risk averse, and we need to get you more risk tolerant, and you need to invest in more low to medium risk assets. So have your long-term investment plan. And finally, have your estate plan. Guys, watch your will. What plans do you have? What benefits do your heir apparent enjoy after your demise? So these are all the plans we need to put in place while we're doing financial planning. You need to take some time, obviously, to sit down and think about these. You have a lot of work to do figuring out your assets, your liabilities, your income, your expenses, and what your priorities are in life. These priorities will obviously shift over time. But the good thing about financial planning is that it takes track of this long and short-term changes, okay, to ensure there's a smooth transition from one to the other through life. And you can live life as you please, enjoy life, because nobody came to this world to suffer, even though suffering is in the world with us. So I really hope this has been helpful to you in thinking about financial planning. Let me know what comments you have. Where are you in your financial journey? Do you have a financial plan? You have issues, tracking your assets, your liabilities, your income, your expenses. Do you need help with doing these things? I offer this help, obviously at a fee, but a very small fee. And I also give financial education. So you're going to one-on-one with me. My email will be there in the description. Send an email and we'll book a time for this conversation. I hope this has been useful to you guys. I hope that you understand why financial planning is necessary and why you need to start doing this for yourself. If you want me to do a hands-on session with the spreadsheet and everything like before, let me know in the comment section and I will work on that on my next video. So we can just walk through some of this together, and maybe I'll walk you through my own financial plans, because I began tracking my expenses, and man, the amount of money I spend on food is alarming. So okay, so I hope this has been useful to you. Don't forget to like this video, leave a comment, share it, and subscribe so you don't miss on future videos. It's been amazing doing this with you guys. I will see you next time. Bye.